5, 4, 3, 2, 1, 0.
Ladies and gentlemen, I appreciate very much your generous invitation to be here tonight. You bear heavy responsibilities these days.
Welcome to Stock Legends Radio Show, seeking answers, opinions, and the inside scoop, putting you in the front seat on Wall Street.
In today's market,
this is breaking news. Where is it going next? Ladies and gentlemen, welcome to the Stock Legends Radio Show, Episode 5. Please welcome today's hosts, myself, Quick Draw, also Matt Chart, our Senior Technical Analyst. Matt Chart, welcome to the show.
Hey, Quick, happy to be here.
Excellent. We have an exciting show lined up for you today. We have two special guests, not just one. The first of which is the Yak from omgyak.com. Those of you who are members on Investors Hub also know him as the moderator of the Scalp Swing Straddle board. Our second guest will be M.E. Garza from biomedreports.com, one of the leading sources for up-to-date biosector information and due diligence. Now, let's take a quick look at the market, Matt, and what's going on across the world. You put a couple of projections out on our last show. It was probably, I think, about 2 weeks ago at this point, and pretty much as usual, your chart estimates and levels pretty much fell dead on cue. Why don't you tell us a little bit about what's going on in the world markets?
Well, we saw a nice correction off the U.S. dollar. We were hitting a high here of 79.84 on the U.S. index. It's corrected down to 67.39 here as a close, and it looks like we probably have some more downside risk in the U.S. dollar in the following weeks ahead. Precious metals have had a huge correction over the past few weeks, and we're sort of got that sideways consolidation going on. And we could very likely start to see a rally and recovery in both gold and silver. Gold's hit a recent high, nearly $1,700 just last week. A nice recovery from its low of $1,535, but we could see some more further upside here. So I think these are probably great opportunities still to get into the precious metals market. It's a nice correction that we've had here, and we could see a nice rally here coming up in the next little while. The stock market, looking at the Dow Jones Industrial, probably seeing some sideways action over the last few weeks, and we're probably going to see a little bit of a continued rally here. It looks like the stock market is breaking out of its consolidation, and we're currently up here at 11,800 points, closed very close to the high of the day, up 2% on Friday. So we should probably expect a nice green week in the stock market in the next week or so. I was originally projecting that we'd see a further correction. I'm reversing that stance, and it looks like we're going to get a rally here in the markets instead. U.S. dollar is probably going to pull precious metals up and commodities and oil, and it's going to be good for the stock market as well. So that's some positive news, because we do have quite a bit of an interesting previous week here in the markets. Some interesting news to go over, starting off with, I guess we had some interesting protests down at New York City Bank. We had some protesters that were arrested for trying to close their bank accounts. Kind of an interesting situation there.
Now let's take a quick look at this. Okay, you've got peaceful protesters. Okay, these are people that came out to prove their point, and you know, we've seen this happening in cities across the country, and of course we support it. We're the people. You know, the whole financial system, government, everything's supposed to be built off of the people, hence democracy. Now these people go in and they try to close their bank accounts. Not only do the police show up, but the police lock the doors behind them in the bank.
Actually, it was the manager of the bank that.
The manager. Yep.
Yeah, the manager locked the doors of the protesters showed up to close their bank accounts, and the manager came in and said they were trespassing. Generally, I would assume they would be asked to leave, but at this point, they were locked in the building until the police arrived, and they had arrested 24 people, and they're charged with criminal trespass, and one was charged with a resisting arrest. Probably not very happy about being arrested for trying to close his bank account.
Well, yeah, I mean, you're talking about your money. You're talking about a public bank. And not only that, once you went in to close your account, they locked the doors behind you, so you weren't even given the opportunity to leave. So, I mean, what amount of rights were actually broken and violated at that point in time?
Well, I don't know. There should probably be some sort of investigation of this. I mean,
absolutely.
A few weeks ago, we reported that the new J.P. Morgan had given $4.5 million to the New York Police Department for I'm not sure exactly what, but I'm not sure if this is what this money is being really used for. I
Right.
mean,
Is this the
you have to
start?
ask questions. You have to ask questions like, what is this money really being used for, and why are the police behaving this way when it seems like citizens' rights are being violated?
Right. Is this the start of a conflict between the people and the financial institution for not the first time, but the second time? When was the first time, Matt?
Well, yeah, the original revolution of the United States for their independence in 1776, Benjamin Franklin himself said the primary cause of revolution was, I'm going to paraphrase here because I don't have my material in front of me, but the Bank of England had outlawed the colonial script that the states were issuing themselves, and they were forced to borrow from the Bank of England at interest, immediately putting the colonies into debt. And so there was an uprising of the people. There was many factors here. I'm citing one, but people were clearly upset, and we had a war with the British. And we won. Now we've got another banking institution here that is putting the people into debt. People are trying to close their bank accounts, and now the banks are resisting. I think they could possibly be scared. If it's possible, we could see a run on the bank. If people start closing money out of their banks and putting them into things like credit unions, which is one thing I believe that I think the anonymous protesters have been, the anonymous YouTube has been saying as a solution to take your money out of the banks and put them into credit unions.
Right.
Maybe the banks are afraid to see a run on the banks and forcing them to close. So
And
this
that
is
brings
how they're
me
fighting
exactly.
against it.
And that brings me to my next question. Now, if you were to go into a bank today, okay, and let's say you deposit $10 into that bank, how many times would that bank loan that $10 out? Well, what is it, 10 to 1? So if you put in $10 into a bank, that bank will loan $100 against that $10.
It's about
So
that. It depends on what the actual reserve ratio is. It's usually about 9 to 1, 10 to 1. The banks you put your $100 in, the banks can loan that out 10 times and make interest on that loan 10 times over the $100 you deposited, basically.
right. So if 10% of the actual country were to remove their money from the United States, from the U.S. financial system, that system would actually collapse.
Well, there wouldn't be, the banks wouldn't have, you saw what happened in the 1920s when people went to deposit or withdraw money from their accounts. There's a run on the bank. The banks don't hold all the deposits to meet everyone's loans or everyone's money. So you may show $1,000 in your bank account, but that bank may only have $100 of your money sitting in there at any given time. So the confidence of the system exists because people allow it to and leave their money in the banks. If everyone decides to pull their money out of the bank, there's absolutely no way that the banks have enough reserves to pay everyone their money that is showing on your bank account.
We came across something unique the other day. We've noticed the actual debt clock as far as independent nations, but at theeconomist.com, Matt, you brought this to my attention. They've now put up a global debt clock, and it shows, countries that are in green, countries that are in red. We're happy to announce that Canada and the U.S. seem to be the highest debt in the world, besides Japan and a couple of European nations. So, Canada, welcome to the club.
Yeah,
all those Escalades you guys are buying.
Well, it's per capita, not the total debt.
Right.
I mean, Canada is such a small country compared to the United States, but
exactly.
Also Japan was up there quite high, I believe, as well.
Now this clock is right now showing about 43 trillion. But what's amazing to watch is that every tick, this is moving about $500,000, and that's like per second.
It's a lot of debt that we're adding up here.
It's unbelievable to watch. I mean, you can literally sit here over the course of the day and just watch these numbers just continue to climb and go through the roof. So, my next question is, where and how does it stop? Because everything's so out of whack that any recourse is going to be nothing short of, the dark ages.
Well, I mean,
pretty amazing. The week coming up here, we've had some exciting events in the OTC roundtables. DTCC trying to pass some new regulations, all kinds of things affecting the market. It does seem like the winter market is starting to come back into play here. Some volumes are starting to pick up. I've seen some stocks running in different directions, which is very exciting to see. We went a long period of time where it seemed like there might have only been one or two runners per day, if that even. So hopefully the market will start to expand in the OTC. Some of the big board guys will start coming down. Some of the seasonal traders will start coming back into the market for the winter months, and we could see an exciting week here.
That would be fantastic. It'd be nice to get some more interest and volume in the OTCs. As many of us have noticed, they've been quite lacking over this past several months, almost a year. And, possibly we're maybe hit a bottom and we're going to see a, new volume and interest coming back in. It would be great to see.
We've got a fun and exciting show lined up. We are going to go to a real quick commercial break, and we will have our first special guest up after the short break. Thank you.
Wondering about your retirement portfolio? Is your financial advisor experienced enough to combat rising interest rates, taxes, and inflation? Stop guessing and go to the expert, Robert Chapman of the International Forecaster. With 45 years of experience and concise investment recommendations, who needs sugar-coated excuses? Get the cold hard facts and a proven investment strategy. For a free introductory copy to the International Forecaster, call 877-479-8178 or go to theinternationalforecaster.com. That's 877-479-8178. 877-479-8178.
Investors, welcome back from that short radio break, Stock Legends Radio Show. We are extremely excited to have our next guest here. He's known by Investors Hub as the Yak, the Scalp Swing Straddle Board, and also OMGYak.com. Yak, welcome to the Stock Legends Radio Show.
Hello, everybody. How you guys doing?
We're doing very good. Thanks for joining us today.
Thanks for having me.
Now, we want to take a quick look at your past. We know that you're one of the well-versed, experienced traders that we come into contact with over the trading day. How long have you been trading securities?
I've been in the market for about 10 years now, and full-time for 6 years, and 4 years full-time property trader.
Great. Well, why don't you tell us a little bit about how you decided to get involved in the market, and you do this full-time now. So what made you want to switch to full-time?
Okay, well, I have a background in engineering. That's why I actually studied. It's a little bit odd that I would go from that to this. At the end of the day, it's all numbers. It's really how you factor everything in at the end of the day. How did I get into the business? I just found it very, very interesting for many reasons. There is money to be made on a daily basis. There is no limit as to how much money you can really make. That's a great plus. And it's very challenging. Any situation that arises at any given day where you have to battle to make the money, I found very, very interesting to me, and I found the appeal in it. Probably one of the main reasons why.
Now, the average trader might take a look at the business as a whole and say, hey, you can go into the stock market, you can make $1 million overnight, you're going to be successful. But a lot of people don't realize that it's nonstop education, learning, and staying ahead of the curve that actually separates the winners from the losers in this business. Right. Now, you've been more or less a mentor to a lot of traders. You do everything from one-on-one trading seminars. How do you feel that a daily stock curriculum affects a trader's percentage of between winning and losing? Do you think that plays a large role?
Sure. I want to actually go back to the first thing you said, which is make $1 million. That's the wrong idea, and of course, it's the wrong approach most people have with the market. I mean, sure, you can make $1 million. There is no limit as to how much money you can make. But coming to the market with that approach, you'll most likely lose $1 million before you make it.
Exactly.
The bottom line in the market, at least to me, is consistency. That's what I try to teach people on a daily basis. Something I try to explain to people on a daily basis is consistency. If you are able to be consistent, means you limit yourself both on the upside and on the downside, then your lifespan in the market will be more than the average traders, which is about 6 months to a year. What I do on a daily basis, I split it. Morning sessions, I day trade. I project my monitors. I project my charts. I explain my trades, my ins, my outs. I give my reasons behind everything that I actually do. And I try to spend a little bit more time on the afternoon sessions, on one-on-one, as you said. Why do I think why some people might find it interesting or some people might find it important? A lot of people are very shy. You can understand when you trade, there's a lot of ego involved, unfortunately. And when you take away the ego aspect of it, we're all, at the end of the day, just people. But sometimes people are very shy in asking questions. They don't want to sound, between quotes, stupid.
Right.
But this is not so much about sounding stupid or being stupid. It's about understanding. And if you want to learn something, you just might have to ask it bluntly. I don't understand this aspect. I would like to understand it a little bit better. And I'm always more than happy to break down things that I know. And if I can explain them in a very straightforward and easy manner, that's a great thing done. And what I want to do basically is help people not to make the same exact mistakes that I have made in the past. Sometimes get too greedy, be too fearful, let the emotions get in the way of your reason, that kind of stuff. I mean, if you think about it, the market itself is 90% psychological and 10% technical. You can read all the books you want, and you can listen to anybody that you want. By the time the 9:30 bell rings, everything that you know is going to be out of the way. Emotions will take over. and everything you learned is just going to be gone. And you think that you might follow the instructions, the education from all those books and from seminars, etc. 9:30 to 4 o'clock is emotionally driven, which is mainly why you see the market so volatile these days. So emotions, unfortunately, are the greatest enemy for any trader. And when I say emotions, not just the bad ones, means the fear, not wanting to lose, etc., but also a bad emotion, as in greed. You want to make more. Making more is great, but if you're going to limit yourself to the downside, you should probably as well limit yourself on the upside. If I tell myself I want to lose only this amount, then maybe I should tell myself I also only want to make this amount. That's going to help me become more consistent. Otherwise, I'm just hoping, and hoping really isn't a trading tool.
So you're saying, it's a great concept before you enter that trade to have an exit strategy ahead of time, both for making money and losing money, saying that, I will only risk this amount of money as a loss. And if it gets up to this high point, and I'm in the profit this amount, at that point, I'm going to exit my trade and take my profits and make sure you follow your action plan.
Of course, you have to have a plan of action. You have to have a game plan. If you're going to trade blind, when are you going to exit? When do you think it's enough? Never. I mean, think about it. If your P&L, profit and loss, is moving up, 500, 700, 1,000, it keeps climbing, are you going to sell? Not really. You're going to keep holding on to that position. Okay, now it goes a little bit against you. You're going to hold a little bit more. Why? You think it's going to go right back up. What if it doesn't? Not only you missed your profit, now you're breaking even. A little bit from now, you're going to lose money. So you had no plan of action. You traded blind. You did not cap yourself in either direction. And that, I think, is very wrong. If you're going to tell yourself, I'm going to lose 50 cents, you should also tell yourself, I'm probably going to try to make 75 cents or $1. That's a 2-to-1 trade. That's excellent. Once you hit your quota, close the trade, move on to the next. Making anything between 5 and 1,000 a day, how can it really go bad? I don't see how.
Is there a limit of the amount of open trades you would recommend, a beginner or intermediate or seasoned trader should probably have at any one time? I think one mistake some people do is they take on too much and they can't manage and pay attention to, 5 stocks at the same time or 10 stocks. What would you suggest is probably a healthy maximum that people should focus on at any given time?
Well, before anything, what I think is right or wrong is relative to what I think is right or wrong. It really all depends. Let's just put it this way. Trading is really all about comfort. You have to be comfortable with what you do. My comfort level could be very different from yours or from Matt's. Very different. Maybe I can handle a much bigger loss than you can. Maybe what I make is not enough for you. Maybe I'm okay holding 5, 6 positions at once, and you can hold maybe 20, and somebody else maybe can only hold 2. So it's about comfort. You have to find your niche. What are you comfortable with? Once you find your comfort level, as far as how much you're looking to make, how much you're looking to lose, what are you okay taking home, how many positions at once? If you tell yourself, I will not trade stocks between this price and this price, it's really all about strategy, put it that way.
Okay, now you mentioned something earlier that actually caught my attention. Being a fairly new trader myself and not having the years of experience under my belt that you obviously have, I've been victim of the emotion that's driven at the bell. At 9:30 when that bell goes off, there's stocks running and you're thinking, oh my God, how am I going to get in the next runner? All education goes out the window. Now at omgyak.com, you have live trading seminars during the day. Now, does this help counterbalance a lot of the emotion that's driven in selling? Do you use your expertise and words of wisdom to calm down the traders throughout the trading day? How many times a day do you have these classes and for how long do they last? Why don't you explain that system a little bit to us?
I think that if people watch somebody else do the same thing that they're trying to do, only maybe a little bit better. And what I mean by better, not so much making more money, that's irrelevant. By better means how is that other person able to control himself or herself during a certain situation. So if people are able to watch me live conduct my trade from A to Z, the reason behind it, why did I pick it, why at that price versus the market, at what given time, etc., all the ins and outs. If they're able to see me do it live, they're going to be able to ask themselves, why didn't he freak out? Why was he so emotional? Why didn't he sell here? Why didn't he buy here instead? If they get the reason, the logic behind the trade, I think they can become a lot more comfortable. By watching, you get to learn. As they say, seeing is believing. I can tell you anything I want to tell you, you won't be able to take it for face value. You have to see it. So the 9:30 bell, here's what we do. We actually meet up every day at 9 o'clock from Monday to Thursday. 9 o'clock, we have a POA, our plan of action. We're going to trade this stock, this stock, this stock. The market hasn't opened yet. The biggest mistake people make is they wait for 9:30 to then have a plan. That's the wrong way, I think, for me, of going about doing things. If you want to trade the market, have a little game plan way ahead. Sometimes even the day before. Of course, the futures go against you. You might have to start from scratch. But for the most part, between 9 and 9:30, you should know exactly what are you going to do. So by the time the market opens, you're going to go ahead and deliver. And that's what I'm trying to teach people. They get to watch stocks that I pick. And they do ask me, why did you pick these? And I explain why. Whether I think stock is going to move against the index, whether I think a stock is going to move regardless what the market does, whether I think a stock is going to be a good short for that day, and the reason why, whether it is an earnings play, a momentum play, etc. So giving the people the edge of being able to watch somebody else do it in front of them, I think helps them control their emotions a little bit better. I think it helps them understand the basics a little bit better. You can read in a book all you want, as I said in the beginning, and you can listen to somebody speak all day about the market, about trades, etc. But you have to be able to replicate that model between 9:30 and 4 o'clock. Otherwise, that education really is pointless. There's a big difference between learning something off a book and learning something in the market. And I think the best way for anybody to learn to trade is not off a book, it's by trading. You're going to make mistakes sooner or later. Might as well make them early than late. So if you want to learn, maybe start by trading than reading anything off a book. That's just my opinion, of course.
Now, we look at all different aspects and opinions, positions on the market. We talk to some people that do long-term swing positions. Some are day traders. Some are pink and OTC. Some are, NASDAQ. They're all across the board. Now, your iHub board says no pink sheet stocks or OTC. What is the reasoning behind that, and how does that play into your trading methodology?
Well, the reason behind that is relatively simple. I mean, as everybody that will listen to this will pretty much giggle the first thing after you ask that question. Well, 99%, I mean, the survival rate in the pink sheets is relatively, slim. You have to be on the other side of the trade to make any money. Otherwise, you're not going to make anything. Maybe you get lucky once or twice, but luck, one sure thing about it is that it changes. And for the most part, it change the other way and you lose money. But why do I think pink sheets and OTC are not the way of trading? Well, what's your edge, really? I mean, who are you trading against? You're trading against another individual? Are you trading against the company itself? Are you trading against your own self? You don't know. And that's the gray area that I don't want to fall into. I would prefer to have the same exact edge as everybody else. I mean, if I trade the liquid market in the S&P 500, technically I have the same exact tools as everybody else. I mean, I don't have anything extra. I can't come up with anything extra. I'm watching the same thing everybody else is watching. But what gives me the edge? Well, something different. When you're in the pink sheets market OTC, you have no edge. You have to get the heads up, between quotes, heads up. And I just don't think that's really trade. I think that's more gambling if you're on the wrong side. And if you're on the right side of the trade, that's just taking advantage. And neither side is good.
Now, while you're trading during the trading day, there's a lot of things that can make the difference between a winning trade and a losing trade. When you're day trading and you're moving with quickness, obviously speed of trade execution has got to be a major factor between winning and losing. If one person's entering and exiting trades profitably and quickly, what do they have that's giving them an edge on the system? Now, you have a system, and this is actually I believe a keyboard overlay. It's called a hotkey trading system. How exactly does this work? And this is also available at omgyak.com for the listeners today. How does this work, and how can it benefit traders?
We're in a new era of trading. Technology has advanced so fast in the past couple of years that retail brokers, I don't think, can really keep up. People that trade with Schwab, with Scottrade, I don't think they really have an edge. It's still trading market makers, relatively slow on the execution. You have to pop up the window. You have to type your order. You have to click buy. You have to pick the market maker ECN. It's too long, at least for me. When you trade a hotkey, you already have an overlay. You have a preset ECN list that you're going to execute through. And by the way, ECN is Electronic Communication Networks. That's the routes, basically, whoever facilitates your liquidity and your trading. And it will take you a split second. I can push two keys and I have a fill. Whether it is a market, a limit, I already have a preset size, which means I want to buy 500 lot, 1,000 lot, etc. So instead of me having to open my quote, have to type my order, have to click send, maybe 5 seconds went by already. 5 seconds can mean $1 down or $1 up these days.
Right.
When you can do the same exact trade, take you maybe a split second and you're done. So I think hotkey gives you an edge. Like I said, speed is everything. The faster you in, the faster out. Well, the more you have an edge. And like I said, so speed is very important.
Now, talking about execution, as you just mentioned, the difference between success and failure can be how quickly that trade is executed. I know personally, I've traded with a retail broker for a long period of time. I've used Ameritrade. I've gone through the process of punching in the numbers and, having to refresh the screen, being logged out and having to log back in, then having to get comfortable with the new platforms and how to execute the trades the quickest there. Now, in addition to your one-on-one live intraday seminars, which are going to help investors cool their emotions, their hotkey trade execution, which is an overlay for the keyboard that has execution numbers and different commands saved into those particular buttons to speed up the process. Do you have a clearinghouse or system that you use in-house that helps the investors that you're trading with intraday that are part of your group execute their trades faster?
Right. As I said, we use ECNs, electronic communication networks, not market makers, which they're really about the same, just a little bit fast on the execution. And we do have different platforms to pick from, whatever, again, traders feel comfortable with. We have demo accounts people can paper trade on, give them a shot, see how they feel about using them. But like I said in the beginning, the most important thing, as I said, was comfort level. If a trader is comfortable with their broker, because let's say they intraday swing, they're not momentum traders, they're okay buying a stock, selling a stock in an hour from now. Speed there really isn't that much of a factor. But the way I trade, I think the platforms that we use give you a better edge. But that's just what I think. We also help people on different courses. The morning session, everybody gives their input, feedback. We explain as a group. We try to navigate trade to trade. We try to give ourselves a target, a quota for the day. This is how much money we're going to try to make for that given session. If we can hit it because, well, the day just a little bit too hard, we can't get any good trades going, then we stop, wait for the next day, etc. Something I put in the beginning, consistency. I think giving yourself a good target for the day, hitting the target, being done completely, gives you an edge. You're up on the session, you wait for the next day, you give it a shot again and again and again. The point is to be positive by Friday, every single Friday. If you can't, if it's a slow week, it's fine. You have to be able to protect capital at all times. We don't swing, we simply day trade. As for the one-on-one side, I usually conduct those on the afternoons between 1 and 4 o'clock. It really all depends. It could be an hour and a half. We could extend it the full 3 hours. It really varies. It depends on the market at that given day. It depends on the trader. The one-on-one session is a little bit different from the morning session. And a lot of people think that the afternoon session is just for the novice, which is not entirely true. We have just about everything and everybody in our trading room. We have people that have been in the market longer than my own self. People that have been in the market for 15, 20 years that still take advantage of it. And some that have been in the market maybe 6 months, 1 year, 2 years, and they do find something there that they can, of course, monetize on. And the afternoon, as I said, mostly education. I would ask a trader what they have trouble with, what is mentally blocking them from placing trades, and why are they not profitable. They would break down the issues they have. They would break down the problems that they have, and I try to basically fix that up. If it's an emotional thing, well, why do you think you have an emotional issue? Is it the loss of money? That's an issue everybody has. I mean, you have to be realistic. In the market, you're in a business of risk. You know at a point or another you're going to lose money. That's a given. But we are in the business of taking risk. So really, the difference between what we do and what other people do as far as investing is really the same. And I try to explain that to day traders. The only main difference is the time frame. Us, maybe an hour, maybe 2 hours, maybe 15 minutes. To some people, maybe a month, maybe a year. And a lot of people that we cater to are ex-investors that now have a hard time making money. And you can't blame them. So now they're trying to figure out a different way. They approach buying stock and hold stock for 6 months, 1 year. Maybe you're just not going to get that dividend anymore. Maybe you're just not going to get that check anymore. And you're just not going to make any money whatsoever. Maybe you'll lose. But when you day trade, you have, I think, more control over your account. You have more control over your money. And I think you can learn a little bit more about money management than you would just, investing. And ironically, investing now, I think, is more of a gamble than it is to day trade. And I know that sounds very silly of me to say, but I think it is. It has some truth to it.
I've also seen this many a times with investors. They'll jump into a bunch of trades, they'll trade backwards, and there's that fear of asking for help. But what the average investor right now does not realize that the market around us is changing rapidly. It's changing at a pace that a lot of the veterans are having to change their techniques that have worked for long periods of times to adapt to the market. So don't be scared to ask for help. There's seasoned investors here that have some great insight on the market that can help you make money in a down or a bear market by using a level head, by being educated and well versed in the tactics of trading, how to enter and exit, what signals to look for. We want to direct our listeners today to omgyak.com. There's a few different services there that are excellent. One-on-one trading, some hotkeys, webinars, you name it, it's all there. Yak, it was great having you on the show today and your insight. I think the traders are going to be able to learn a lot from the segment today. We also want to send them to your Investors Hub board, which is Scalp Swing Straddle. It's one of the top most viewed boards on Investors Hub. Very productive. There's some great information and traders there. Yak, it was excellent having you on the show.
Thank you guys very much for having me.
Sweetheart, now you're getting a little bit older. What do you want to do when you grow up?
Daddy, when I get older, I want to flip stocks.
You want to flip stocks? Well, how are you going to go about flipping stocks?
StockLegends.com, duh.
StockLegends.com? I heard that they have the best stock picks around.
Of course they do, Dad. Time is money. I gotta go.
Ladies and gentlemen, welcome back to the Stock Legends radio show after that short break. Up next, we have Emmy Garza, founder of BioMedReports.com, one of the leading sources for up-to-date biosector information and due diligence. Mr. Garza, welcome to the Stock Legends radio show.
Hey, it's great to be with you guys. I appreciate the invite.
Hey, welcome aboard.
It's great to have you. Why don't you tell us a little bit about why you launched Biomed Reports and what was your inspiration behind launching that and your ideas behind it?
It was right around the time that the stock market almost went off that cliff in 2008. I had been an investor since the 90s during the whole dot-com boom and everything else, but I really had taken an interest in biotech at that time because the Obama administration was coming in and they were talking about healthcare reform. And my thought was, if the government is going to start paying for healthcare, they're going to want to start paying for cures and not necessarily just treatments like they do over and over again. So there was a lot of really interesting things going on, as there are now. But I really felt like biotech and healthcare, which had really seen a real revolution in the early 90s. There was a lot of money, many, many billions of dollars trading back and forth and investing going into healthcare, into the healthcare sector, and then also into biotech as a subsector or as an industry within the healthcare sector. And I kind of saw that coming around again. And I thought, this is great. I'm making a lot of money making some biotech trades. But the one thing that I don't have that I really need as an investor is something that institutionals and high net worth individuals have. And boy, it's really difficult to get this kind of information at the time. And that was an FDA catalyst calendar. In other words, when these stocks in the healthcare sector get approvals from the FDA, or when they get clinical trial data, when they have other catalysts like European approvals or Japanese approvals or Health Canada approvals, all those things make these stocks spike. And we didn't have that information. At least the retail investors didn't really have access to it. You could pay a lot of money, thousands and thousands of dollars a year to get that information, but there was nobody really providing that information. So I found my co-founder of the site. He was kind of giving away the information on a blog. His name is Mike Havrilla. And Havrilla is a really smart guy, great biotech investor. And I reached out to him and I said, hey, Mike, you're kind of giving this service away. I'd like to expand on it. Let's build a better machine. Let's make this available at a Walmart type price for the investment community so that retail investors can get excited about biotech and healthcare stocks. And so we built Biomed Reports. Mike ended up leaving us shortly after, about a year later, to run a hedge fund, which I'm not sure if that ever took off or not, but he decided that that's what he wanted to do. So he left and we continued with the site. But one of the interesting things that happened was we noticed very early on that the more we blogged and talked about these healthcare stocks, the more subscriptions we sold. And we launched the Biomed Reports FDA calendar very successfully. It was very well received. We have a lot of subscribers, but we noticed that we needed to talk more about the sector and educate people and take some of these really complex scientific and medical discoveries and initiatives and innovations and sort of break them down and digest them for the common man, for somebody who doesn't have a medical background necessarily, and kind of talk about the implications of these things. What sort of opportunities exist in the market for a particular technology? How difficult is it going to be for the adoption of that technology, even if it does come to market? Things like that. So we really dive into that kind of stuff, particularly me and some of my reporting. We became very much at that point, we sort of transitioned from a service into a news portal, which monitors the biotechnology, pharma, healthcare sectors for savvy Wall Street investors who are not necessarily, and traders who are not necessarily medical guys or guys with a medical background, which prior to us coming along was what you saw a lot of. You saw a lot of medical background type of guys. One of the things that I think was astounding is that recently we saw some reports go by that for the first time since the 90s, healthcare and biotech investing has amassed, $32 billion in funds or something in the last year, 2010. And that was an exciting time for us because we knew that we were right when we were thinking that this was going to become a hotter sector. And I think we had a little bit of something to do with that. And obviously, bringing our focus, our expert analysis and trade picks, and then fueled by various catalysts and FDA decisions. And more importantly than anything else, I think we really pride ourselves in reaching out to the companies, talking to management, getting their takes, getting behind the story, something you don't get on press releases or data that you're looking at. You really want to hear it straight from the voice of the people that are in charge of some of these companies, what is going on, what some of their challenges and what some of their opportunities are. And we excel at that. There's a lot of people out there blogging who claim to be experts, but they never pick up the phone and call some of these people. And that's one of the things that we do. And that goes across all kinds of sectors. So we really pride ourselves in that. And that's really helped set us apart. And we keep growing like crazy. So hopefully that'll continue, and we'll continue to add and give, good information. Look, we don't always get it right. There's no way for anybody to always get it right, but we better have a pretty darn good batting average if people are going to continue listening to us. And we stand by our reporting for one simple reason. If we report something, it better darn well have some truth to it. Hopefully more truth than not. If we hear a rumor, we'll classify it as a rumor. If we hear buzz about a certain stock or potentially buyouts or negative decisions or positive decisions, we're going to report them. But we can't make that stuff up because we are accountable to the SEC and to the FCC. We can't just make stuff like that up. So our whole model is changing. We're evolving as a news organization and as a trading portal, constantly trying to make our product better. And we're excited about it.
It has a lot to do with why some of the investors never looked into the biosector, because it is such a strategical business. A lot of doctor and pharmaceutical-based terminology and projections, but having it all in one place, with the FDA calendar, with the actual story behind the companies, will alleviate a lot of that stress and pressure by moving into the biotech sector. Do you feel that's why a lot of the investors were scared to invest, because of the magnitude of information that just comes through the airwaves? It's hard to kind of lay it all out on the table and say, okay, here's the timeline, here's the due diligence, here's the projected numbers based on this FDA approval and the dates that it could come to the table. You think being able to make some sense of the scrambled mess in return makes an intelligent investment decision and therefore makes your subscribers profitable. Is that more or less the business plan behind biomedreports.com?
It is. And I think that one of the things that I learned early on is that there are trades to be made. Like, behind the scenes, we sort of call them girlfriends. Is this a girlfriend or is this a wife? Is this somebody that you want to marry?
Exactly.
And there are lots of girlfriends out there that you want to kind of be around and trade, and then you won't get out because maybe they're too early on, or maybe they're still in an early phase trial or whatever. But there's still a lot of catalysts out there. And then there's companies that make great investments. And those are the ones that you want to hold on to because they're going to appreciate tremendously. The biotech sector has been outperforming the market for a while. Why? Because there's a lot of emerging companies. In other words, there's no place to go but up. Some of the companies that have really been hurt in these bear markets are companies that are big. And even some of our bigger biotech companies and healthcare companies, these are companies that have multi-country type of services and industries that are all over the place in Europe and so forth. And so as you see some of those markets get affected, their stocks get affected and so forth. But we feel the emerging biotech sector. That's where you really see a lot of volatility. Heck, when a big company like Johnson & Johnson or Merck or any of these other guys get an FDA approval, the stock barely moves. But
Right.
when a little guy comes around and this is one of their main products in their pipeline, or it's really going to help push their pipeline forward, and they get that FDA approval, it makes all the difference in the world. I mean,
I
we
agree.
saw companies really early on. I covered HGSI when it was like $3 a share, went to 5, then went to 15, and here they are talking about it, being bought out now. And then Dendreon was another. You had some biotech bloggers out there saying, "Oh, this is going to get a negative approval." We were very bullish on it. Stock went from $3 to $32 overnight.
Wow.
That's the kind of stuff that we're talking about. It doesn't happen every day, but it happens pretty frequently, and you can make some really good money. Give you an example from just Friday. We had a stock, HALO, Halozyme. We started covering and talking about that stock because we look at our catalyst calendar and we said, hey, wow, look at these guys. They've got like 2 or 3 catalysts coming up. You need to be paying attention to them. The stock was at $6. People started to buy in. All of a sudden, they got news earlier in the week. The stock went to $7. And then they got news again on Friday. The stock went to $8. It may continue up even higher now. So those are the types of things that we do. And, they're not all huge victories, but chances are you're going to make a very nice return on your money within a short period of time if you buy a basket of these stocks. So just
Right.
in case one of them gets bad news, you don't hurt your entire portfolio. And that's one mistake that a lot of these small cap emerging company investors make is they put all their money in one company. Don't
All
do
their
that.
eggs in one basket. Exactly.
No, absolutely not. You want to definitely have your bets on a bunch of those different eggs so that in case one of those eggs gets cracked, you don't get sunk. And then chances are, if you're being smart and you're watching the trends in biotech and you're watching those FDA catalysts coming up, somebody's got great phase 2 results coming, or we don't even know if the results are going to be good or bad. But that's one of the interesting things about biotech and healthcare is that if you have those catalysts ahead of time, if you have that calendar, you can get a position early, a month, 2 months, sometimes even just weeks before that decision, and you see this biotech run up in anticipation of that forward-looking news event. It's really quite a tremendous money-making tool that you can use over and over again. And then, if the stock pops and you want to get and turn around and go on the short side of it, then that's fine too. It makes you a better trader. Like anything else, it's all about information, having that information,
Knowledge is
being
power.
well distributed. Yeah, knowledge is power.
Now, with that being said, do you have any stocks that you're highlighting right now? I mean, what would be your top 2 or 3 in the biotech sector for our investors and listeners today that may not be a member of biomedreports.com as of right now? What should they highlight for the coming weeks? I mean, are there any ticker symbols or companies that have things coming to the table that you think would be profitable and worthwhile to at least pay attention to in the coming weeks?
Well, we definitely have those every single day on the site. You can come on the site and we track things that are going to be popping in the short term. A lot of those girlfriends that we talked about, we have those picks all the time. But if you're looking at good investments, there are definitely 3 that stand out. The first one that we've been talking about quite a bit, and the shares are still inexpensive, but they have an upcoming FDA decision that I think is going to be very critical. This is going to be one of those companies that probably gets taken out because it's a disruptive technology. It's got a multi-billion-dollar application, and it answers a big problem in the growing diabetic sector, which are these diabetic foot ulcers. And that's just for starters. Somebody came up with this really innovative idea. They took this machine that creates sonic waves, okay, and they use these waves. They used to sit you basically in a bathtub when you had these stones in your gallbladder or stones, in your body, and they would break up these stones with this sonic pressure, with these sound waves. They would put it in the water, and the waves would travel and get into your skin and into your organs and break up these stones, right? So you'd be able to pass them.
The kidney stones. The kidney stone. Yeah.
Thank you. And so they took that technology. They made it small. They put it into basically like a handheld unit. They had the idea that these sound waves would basically allow these unhealing foot ulcers, and also they are looking at orthopedic applications like wounds. They noticed that bones that were broken would heal faster if you put this application on your skin. So they take this machine and they put it right on your broken bone or on your foot ulcer, which is what they're up for FDA approval right now. By the way, this has already been approved in Europe. But this company, it's called Sanuwave, ticker symbol is SNWV. They are up for FDA approval. We're looking at FDA approval possibly at the beginning of next year. This is a really interesting play. Why? Because until this time, the only solution, or one of the only solutions that people had, diabetics that would get these foot ulcers, unfortunately, was amputation.
Right.
These foot ulcers, especially ones that just don't heal because of really bad circulation and all the other things that diabetes brings on, they're really problematic for the diabetic who suffers from these. And of course, the other thing that makes this an interesting investment is that the diabetes space, unfortunately, is only getting bigger. More and more people are getting diabetes. And so this solves a really huge multi-billion-dollar opportunity for this machinery. Now, what's interesting about it is you look at the competitors in the space, and you've got companies like KCI, Kinetic Concepts, which is out of Texas, and those guys are the leader in the wound care space, and they trade at multi-billion-dollar market caps. There's definitely rumors that KCI would take out Sanuwave on approval because this machinery is really amazing. They just wrapped up their phase 3 studies. The results were absolutely spectacular. Again, this is a technology that's already been approved in Europe. Now they're coming to the United States. They're already generating revenue, which is really unusual for a biotech firm. So that's one that I really like. Another one, of course, is everyone talks about the stem cell sector and what great promise the stem cell technologies hold. There's a company that has also a disruptive stem cell technology. These guys are really interesting because they have a technology that is already approved by the FDA under a weird sort of law that was put in place or helped put in place by the Obama administration. It's called the FDA 361 rule. And the FDA 361 rule says that you can use your own bodily products, including your own stem cells, your own blood, your own, whatever fluids, to treat yourself, so long as, number one, it's autologous, it's your own. Number two, the procedure can be done within the same office visit. Number three, there's minimal manipulation of the product, whether it be blood or stem cells or whatever. And then number four, that these cells, once they're extracted, for example, aren't transported a very long distance. So these guys meet all those four requirements. The implications are that this company has a patented way of removing stem cells. They're called adipose stem cells, which is basically the scientific term for fat stem cells. Very much like Cytori, which is a company that is out of San Diego here. And Cytori was on the cover of Wired magazine just a few months ago for their breast augmentation technology. They would remove the fat stem cells. Scientists figured out that we have a bunch of stem cells in our fat, and that those stem cells can be used and adapted to almost any other. They'll turn into any other cell that needs repairing in your body, which is really interesting. And Cytori uses these stem cells for breast augmentation for women who've had their breasts removed. Their proposal to investors is that we can take these cells and regrow a woman's breast after, say, a mastectomy.
Like a cancer or something.
Or like a cancer, exactly.
Right.
So, that's amazing.
So what these guys have done, this other company, the one that I'm looking at now, is called IntelliCell. I started covering it at $3. The stock's been up as high as $5 recently. I think it's down to $4 right now. But this is potentially a very big winner in not only the short term, but also the long term. Why? These guys have figured out a way to have you come into a doctor's office or even a dentist's office. They remove, using basically liposuction, about a cup worth of your own fat. They put that fat into a cavitation machine, which uses, again, interestingly enough, sound waves to break free those stem cells from the fat. The stem cells are then used either directly by injection into the areas that you need them, or they can infuse them using like almost like an IV drop into your bloodstream. The stem cell starts swimming around and going and repairing all the things that are wrong with you. And I know that's way an oversimplification, and the other thing that, some of the sort of naysayers are saying is, well, does it really work? For the first time this past week on Thursday, the company came out with a peer-reviewed journal study. They used the technology for people who were suffering from gum recession. When your gums start receding and there's no way to like really fix that because your gums won't grow back. Well, they took some of these stem cells, these dentists, and they injected them into people's gums. And of the 8 people they did it with, 8 of them saw results. It's really interesting. And then there are applications again there in the orthopedic sector for all kinds of things like scars, bone fractures, people who have cartilage problems, people who've had back pain. I've spoken to a lot of people who've gotten the treatment, and it's really a fascinating play. Why? Because it's going to eliminate the wait period. Doctors in their offices can go in, they can remove your stem cells, use this IntelliCell technique, and then reintroduce your own stem cells into your body. And it's really not that expensive, honestly, but I think IntelliCell is going to generate, they're on target to generate something like $40 million this year. And they're going to be opening centers all over the country. They've already started opening centers. But where this becomes a really interesting play and where the stock, I think, starts going nuts is when athletes and sort of high-profile individuals start using this technique. And already the company has, at least according to our sources, been talking to sports teams and talking to athletes about using this. If you guys remember in the last year or so, PRP, which is a technique with your blood platelets and stuff, the athletes started using this to help repair their bodies and come back from injuries. Well, this is going to like take PRP and put it out of business.
Right, exactly, exactly.
And then and not only that, but if we look at the rest of the stem cell sector, there's a lot of companies that are in the middle of these, phase 2, phase 1, phase 3 studies for different technologies and different techniques. Well, now a lot of the Americans are flying to other countries, for example, China and Europe, where some of these stem cell technologies that we're discussing that are available to you in your doctor's office are already in use in those countries. The medical tourism already exists, right? So if you believe that you can be helped by stem cell from your own body, then you go to these countries. But this will eliminate the need for that, and that'll make it available here. They're going to open, I believe, 40 centers across the United States, basically in every major city, and then use this IntelliCell technology in the local cities at your local doctor's office, et cetera. They're going to be opening what they call centers of excellence for surgical applications. You can insert stem cells into your heart for heart problems. I mean, a lot of this people, the rest of the medical community is very interesting. The rest of the medical community and the rest of the stem cell sector, the guys that are stuck in the middle of these trials, are saying, there's no way this is like all anecdotal. This is prior to this first peer review study that just came out, but they're all saying basically, you can't take shortcuts. You've got to have science. You've got to show that this really works time and again. Well, that's fine. And IntelliCell, I believe, is going to have a path for some of their own clinical studies. But in the meantime, what makes them interesting from an investor standpoint is that there was a company a year ago called Harvest Technologies. Harvest Technologies was a private company, and they were harvesting stem cells from bone marrow. So imagine going into your doctor's office and somebody sticking a really long, hard needle into your bone and scraping the inside of your bone and harvesting those stem cells and then using them for, again, the same types of treatments. That company in the first year made $30 million in revenue, and they just got bought out. They got bought out by a big Chinese pharma company, and they wanted that technology. Arguably, that technology was a lot more painful, and people were signing up around the block for it, and they didn't have anywhere near the number of centers that IntelliCell is going to have. That's what makes it interesting here, is I think that if these guys, take the quote-unquote shortcut, there are still going to be lots of people that are going to pay that $2,000-$3,000, whatever this costs, to go and try. If you have a bad knee, if your cartilage in your knee, for example, is bad. I heard the other day from one of the doctors there in IntelliCell that they had a former baseball player come in there and says, my knees are killing me. They did the process. They injected his knee, and a week or two later, the pain is gone. Why? Because those stem cells go to work and start repairing and regenerating. And it's really fascinating. So, maybe it's going to be a blip on the radar, but I think these guys are going to make a lot of money in the short term. They're certainly probably the only big revenue generating stem cell play out there right now, and that's one that we really like. If they start performing and if this thing goes nuts, you're looking at perhaps a $15-$20 a share stock in no time. So that's interesting.
Did IntelliCell put a time period into play to have those 40 locations open? Did they put a release with a projected outlook?
They did. They certainly did. And it's one that not a lot of people are aware of. We're certainly one of the few ones that have started talking about it. I think Jean Martial, who's definitely his own man as an analyst, journalist, covered them in Forbes magazine recently. You're going to start seeing, I believe, more and more attention, especially if these athletes and teams start using this technology. Then I think that's going to be huge. At the same time, I've talked to people like Satori who've said, we don't really, we think that's bad, because what if something goes wrong? What if something goes wrong? It's going to affect the rest of the sector. It's going to hurt us all. But the question is, what could go wrong? These are your own stem cells, your own body using this. It's not like you're looking at rejection or, again, manipulation using chemicals or anything to release these cells. So it's a pretty clean process. And if we're getting a glimpse of the peer-reviewed data, the medical data, like we saw from them just Thursday in their press release, and the market didn't even really react to it because nobody really knows about the company yet. But if they start looking into it, I think it's really a fascinating process that promises all kinds of different things for our healthcare today, not tomorrow, not 5 years from now when there's an FDA approval.
Well, it almost sounds like the stories of science fiction where we can, regrow our own connective tissues. What's the next step? Are we going to be able to start regrowing entire amputated arms or legs? I mean, that almost sounds like it's a real possibility, and it doesn't sound like it could really be too far out in the future. I mean, as far out as it sounds realistic.
It's not only realistic, it's already being done. There's a small company called Regenison, RGIN, that we covered, although we're not really advising people to get in that stock now. There seems to be a lot of selling, like maybe there was a fund in there or something that's got a lot of shares they're dumping into the market. I'm not sure. Right now is not the time for Regenison, but Regenison licensed the technology from Lonza in Europe, and these guys are seriously growing organs and things like ears and all kinds of stuff in the lab from stem cells. So yeah, that stuff is they're growing. Matter of fact, the technology that they licensed from Lonza has to do with skin. So they're taking the stem cell skin technology, growth technology, and they're regrowing skin. They can take like a little postage stamp size of your skin and duplicate it using the stem cells from the skin. They can like grow yards and yards of your skin.
Wow, so for burn victims, that's great.
For burn victims, exactly. Now, one of the weird things about that is that the skin doesn't have any hairs, but if you're a burn victim, you're looking at basically getting skin. You're not going to have to go through a lot of the very painful skin grafting that goes on, and also you eliminate again the chance that the stuff will be rejected because it's your own. So it's really interesting.
Well, that's the unique beauty, I feel anyways, of the actual biosector is you're investing in a company that could potentially help save or make life easier for hundreds of millions of people. So you take a look at the due diligence, you look at what good it can do in the world, like, people with diabetes that have foot growths, or, somebody that might have been a burn patient, and know that your investment might help the company get the next step to an FDA approval where it can come to market and save millions, hundreds of thousands of lives, help people out. Because that's the unique beauty of investing in this segment of the market, which you typically don't get that kind of emotional purchase feeling in a typical stock. So you're able to stand behind this company and say, hey, you know what? I'm behind this company right now that could, help people out with cancer. It could, help people out that have been burn victims, and it really make a difference
I'll tell you, you're absolutely right. And for us covering the sector and being able to talk about some of our favorite companies and things like that, it makes a huge difference because we are bringing attention. We try to bring attention to the companies that deserve it. Frankly, the sad part about it is that 65% of my time is spent weeding through the bad apples.
Right.
There's a lot of people that.
But you're doing it right.
We try to get it right more often than not, and a lot of times, unfortunately, it doesn't have anything to do with the company's performance. A lot of times, it has to do with what's going on behind the scenes. Perhaps they had a financing. Perhaps they issued too many shares or too many warrants, and then the companies that did the financings are just cashing out of those warrants, and they're hurting the regular investor because they won't let the stock breathe or come up. I mean, there's a lot of different factors. A lot of time, it doesn't have to do anything with the technology. They're just market factors that come into play. And we try to we try to learn and not get caught and not get burned. But I'm not going to say we're perfect, but we better be averaging 75% accuracy, 100% correctness, because otherwise nobody's going to sign up and nobody's going to take on or read our stuff.
And what also makes you different is you're going to take a look at the good sides, and you're also going to take a look at the flip side of the coin and say, hey, take a look at this. We might see some selling going on in this situation. We might want to keep a close eye on this for some profit taking. Or if this doesn't go this way, you might want to start to, move out a part of your position. So you're looking at both sides of the coin and more or less really acting as a reliable source in the bio sector, which I think makes you a lot different in the market.
One of the things that we believe is that you can trade Wall Street very well if you narrow your focus, if you kind of cut off all the noise that's out there and you focus on some key stories, some key upcoming catalysts. Maybe you look at some of the insider buying that's going on in biotech and try to find out what those insiders know that we may not know. We certainly cover, a lot of insider buys. We look at the technical analysis. We're nowhere near as good as Matt Chart is, but I've often called Matt and said, hey, Matt, look at this. But we try.
Yeah, he's the best.
There are certain. Yeah, he is, and we look at all kinds of different things when we look at recommending a stock. We look to see how many shorts there are in a stock, or how many shares are outstanding in a stock. Those are the things we try to eliminate and try to really present some good ideas for people. And we're very proud of what we have, and we're gonna, like I said, we're gonna keep evolving and gonna keep growing. And one of the things I think too that people have to be aware of is that you have to not just get excited about the potential of, let's say, a new medical device, for example. A new medical device is wonderful, and it may be a game changer, like we talked about SANUWAVE, but how is that company intending to get that medical device off the invention bench and getting it into the hospital? That's got to be one of the most difficult processes. How are you going to monetize this thing? How are you really going to market it? And we try to look at all of those things and present them when we look at the stories, or we look at the companies that we feature and that we get excited about. Because you may have the best product in the world, but getting it into a hospital is a huge challenge. And unless you've got that figured out and you've got a really good marketing plan and good execution in place, then, good luck. That investment's not going to work out. So you really have to be careful.
Now, we touched on it earlier as far as the bio sector specifically. You were talking about some growth that it's seen and how it's been trading above the market, which Matt and I were actually looking at those charts earlier today. Let's take a look at the next 1 to 5 years. What kind of growth do you see in this sector, and what kind of outlook over the next few years can you give to a new investor that's maybe listening to this and saying, hey, I kind of like the idea of the bio sector, but where is that sector going? Is it going to grow from here? What kind of things are happening worldwide do you think that will affect this sector in a positive or negative light? What's your insight on that?
I think there's a few challenges for the sector, a lot of things at play from a political standpoint. One of the things we talked about earlier is whether or not the government is going to continue paying for different types of healthcare. The diabetic space is a huge one. They reimburse a lot of the expenses there for people who all of a sudden get diabetes, they need dialysis treatments, they got these foot ulcers, whatever. That's one thing. Also, look at health insurance. We're covering a company called Cadasys, which has always been a dog of a stock. These guys, they had sort of a treatment option and some other stuff that they were trying to sell to the health insurance industry. Now, all of a sudden, this little penny stock has finally started to get some traction with some of these health insurance companies and figuring out ways for them to save money by data crunching. They can look at this data coming in from these different member healthcare plans, and nobody else has done that. And all of a sudden, if you got all that data, you can actually start seeing trends in healthcare and going, wow, look, this is a problem that's coming up. We're seeing more of these types of claims. Or in their particular case, they're promising to solve $25 billion problem to the healthcare insurance companies by identifying, even if the person doesn't go and seek treatment, they can tell by the data, the types of claims that they're submitting or not, whether or not a person has, for example, a dependency issue, a drug dependency issue. And those drug dependent users in a healthcare group end up costing an insurance company like 8 or 9 times more money during the time that they're in part of that healthcare plan than other people. So identifying those guys using data and going to them and reaching out to them and making their treatment, plans available to them and stuff, they're able to save these insurance companies money. That's huge. Why? Because our healthcare costs in this country are going crazy. In the last 10 years, or the last 5 years, I believe, they've increased 100%. So there's stuff that is all over this sector that isn't just about the latest innovation in healthcare. A lot of times it could be software. A lot of times it could be a medical device. And it's a really interesting sector from that perspective. There's lots of ways that these companies can make money. But one of the most interesting things about the sector is that all the rules for the rest of Wall Street don't apply. These companies, many of these biotech companies, aren't even making any money, and they're not going to make any money for years to come. And yet, why are they trading where they do? Because people get excited about the potential for a treatment technology, about a new drug, et cetera, and because there are catalysts along the way. And it's fascinating because the rest of the market is like, what have you done for me lately? How much money have you made me, et cetera? Exactly. And that doesn't apply in healthcare. It's very, very bizarre. Are there going to be opportunities in healthcare? Absolutely. There's so many emerging technologies. Right now is one of those times that maybe anthropologists will look back and say, wow, during this time, medicine really advanced and there was a lot of cures and things like that, because you look at some of the advances and some of the things that are on the verge. You look at, for example, cancer. We've been fighting cancer. There hasn't really been a cure for cancer. There's all kinds of new techniques and technologies that are in play right now. One of the biggest that I'm excited about is the immunotherapy space. Immunotherapy means you use your own immune system to recognize when your body has cancer in many different ways. Each of these companies has a different approach, right? But in essence, the leaders, the companies like Dendreon and other smaller companies that are right behind Dendreon that I think have better, more promising, less expensive technologies, what they do is, in essence, they teach the body, here is what a cancer looks like. Because the first thing that happens when cancer starts growing in your body is it sort of turns off the light and says, don't pay attention, I'm not here. Well, these guys take these technologies, they retrain the body, your own immune system, to recognize what cancer looks like, and then to go and attack it, your own immune system, all the tools, your dendritic cells, all kinds of different, your white blood cells, everything that your body's immune system has can be programmed to go and identify the cancer and start attacking it before it becomes a tumor and kills you. So that stuff is very, very promising. We may indeed be on the verge of some really amazing cancer cures.
Revolutionary breakthroughs.
Already.
Exactly.
Some amazing breakthroughs. I mean, already I talked to some clients and patients, should I say, that were in some of these clinical trials years and years ago with things like brain cancer. And I mean, we saw what happened with Ted Kennedy. He got brain cancer in 18 months. He was gone. Some of these companies have patients that have gone through early clinical trials that are still alive 10 years later. And it's really a promising and really amazing time to be in medicine. We talked about the diabetic space with, some of the cures, things like that, the stem cell space. I mean, all of these different things add up to a revolutionary time in medicine that hasn't been seen in a long time. And some of these technologies and the ability to promise not only innovation and healthcare revolution, but also profits for the right investors, the people that are in there looking for the next 5, 10, multi-bagger. It's an amazing time. These picks are fueled by various catalysts along the way and FDA decisions. It's a really exciting sector to be in. But again, you got to kind of narrow your focus and pay attention to what's going on, what the different sectors are looking at or looking like with the different technologies. Are they really showing promise? Are they really delivering results in the laboratory, et cetera? Those are the things that you have to pay attention. And in order to do that, you got to be kind of focused. So you see a lot of biotech investors really focused on the space. That being said, there's a lot of interest from people who are in things like gold and tech stocks that are looking for a 5 or 10 bagger. They come in and out of the sector all the time. Mm-hmm. But we try to provide you with interviews and industry leaders, analysis from those industry leaders to talk about what's going on. And more often than not, we end up fighting with others out there that have a very negative view on technologies. And luckily, most of the time, they're wrong. And those
Right.
technologies do get approvals and do put out really amazing clinical studies and stuff like that. So it's really an exciting time.
No kidding.
There's numerous benefits by going to the website, but just to highlight a few, you've got your newsletter that you put out where you do a lot of the due diligence. You highlight certain stocks. You'll say, hey, this might be a good stock to take a look at for these various reasons. You have the most up-to-date, as far as I'm aware of, FDA approval calendar in the market. They can go ahead and look at timelines where certain things may or may not come to pass and come to the table. You've also got some up-to-date news feeds, which are sector specific. You've got different articles that were posted by different industry professionals. You really have a full portal here to be able to trade and be educated while doing so in the bio sector, which I think makes it a go-to place, for all analysis from start to finish, from fundamentals and on.
Well, Garza, I do have one question for you. Can you tell us about the different levels of FDA trials and approval and generally how that affects the stock?
Absolutely. Typically, you start with animals, right? So you start with what we call preclinical data. And most of the time, by the time these guys come public, they've got some preclinical data, although companies that have larger pipelines may have some stuff in preclinical data. They may have stuff in phase 1, phase 2, phase 3. What's interesting is that you look at some of these technologies and you think, okay, these guys are in phase 1 or phase 2, and they may not get approval, FDA approval, until way down the line, years from now. But one of the things, one of the wrenches that comes into play, or actually a positive, I guess, that comes into play, is some of these guys get taken out after phase 2 data. So you have to kind of keep that in mind. But yeah, you have preclinical, then you move into phase 1 data, okay, which is kind of looks at dosing levels and whether or not the drug is even safe. You're going to inject a few people and see how they react and things like that. Phase 2 data follows, and that's a little bit more complicated. I'm not going to get into a lot of the technicals, but basically it's a little more complicated. You dose a few more people and you look at all kinds of different endpoints that you start out looking at the beginning of the study. Then you move into phase 3 data, and by the time you get there, you've raised enough money along the way, because each one of those phases can be millions and millions of dollars worth of investments to not only line up the study, to talk to the FDA to make sure that you're doing it correctly, to make sure you've got the doctors and the hospitals that are going to be conducting the clinical trials on board. So each one of the steps along the way is very, very expensive. After phase 3, if you get endpoint data that you were looking for, if you were out to cure cancer at a certain rate or whatever it is, then you move into basically the commercialization phase. And then you have companies out there that are already biotech or healthcare companies that are just pharmas that are already all in clinical in the commercial space, just selling their drugs and putting them out into the marketplace, which is of course its own challenge. So there's definitely phases and different steps along the way. Because a company has wonderful data in the animal or preclinical model does not mean, many times often actually it doesn't mean, that it's going to work in humans. So you got to be careful about getting excited about a company too soon. Once you go into humans, as we say, we go into humans in phase 1, then you look at some of the data that starts coming back, and it starts becoming sort of this progression that you're tracking along the way. And so sometimes by the time these companies are in phase 2, they're trading at a much, much higher valuation because they've shown great results in the preclinical and the phase 1. And then by the time they get to phase 3, wow, we call that a late stage biotech. These guys are almost ready to go commercial, go after that FDA approval. And whether or not, that's a very big decision based on all the data and the stacks and stacks of notebooks and research that has been done for years up until that point. So it's an incredibly difficult and long process. But remember, along the way, you got catalysts to trade on. You've got licensing that goes on. You've got all kinds of clinical studies that come out during that time. So there's a lot of opportunities for trading, but you got to pay attention closely, and you got to see who's announcing what and what's coming up, et cetera. There was a company on Friday. If you go to our site, you'll see a company put out saying we're going to have phase 2 results by the end of October. Well, that stock, we highlighted it. We put it on our front page, did a little write-up about the company, what they're studying, how many shares outstanding, et cetera, what the stock's trading at, what their 52-week high was, et cetera. And people have these forward-looking events, and that's one example that I'm bringing up of a catalyst. Here's a company. We don't have any indication that they're going to be bought out. We don't have any indication that their study results are going to be good or bad. or whatever. But already people are taking positions in the stock in anticipation of the clinical trials that are coming out. Why? Because of that same biomedical run-up that I talked about earlier that happens almost every time in anticipation of clinical trials or FDA studies. So just because a drug is at the very beginning and only in phase 1 doesn't mean that you can't trade it all the way to phase 3 or to that major FDA decision or into commercialization. All the way along the way, you've got excuses to trade in and out of these. And again, some of them are girlfriends and some you want to marry.
Right. And that process can take a pretty extensive amount of time.
Absolutely.
FDA approvals are a long and drawn out process. Some people even think over drawn out, and it actually prevents certain medical devices and things of that nature to come to market. It can take a while, and there's lots of hills and valleys along the way, but it opens profit opportunities, due diligence to be segmented and streamlined to the investor to help them make intelligent decisions, which I think is the most important thing. Knowledge is power, more so here than in most other segments of the market. It's been great having you on the show today. We would absolutely love to have you come back at any point in the future. If you have some stocks you'd like to talk about and broadcast to our audience, one more time, we want to send all of our listeners today to biomedreports.com.
Absolutely. Wonderful website you guys have got going. You're doing a wonderful job educating the investment community out there. Quick Draw. And Matt, as always, great talking to you. We look forward to some of your great technical analysis. You are definitely the best out there. And I really appreciate the time you guys have given us. Thanks for reaching out, and we will be happy to come back anytime.
Thank you very much.
Thank you so much.
All information posted by Stock Legends for informational purposes only and should not be construed as an offer or solicitation to offer or buy or sell securities. By listening to this radio show or this poster or this video by Stock Legends, you are accepting sole responsibility for your own investment decisions. By reading messages, doing so in videos, or listening to the radio show, you acknowledge that the information hereunto contained within this message or video provided or radio show is for general opinionated discussion and for informational purposes only, therefore should not be considered to be complete, precise, accurate, or current investment advice. Be aware that internet persons, videos, and so on, not only on the original message board where this disclaimer was discovered or in this video show, but other message boards that is not limited to the originated video of the website, may be increasing or decreasing our share positions in security regardless of what they are saying or posting or construing on this radio show. It may be compensated in some way or form by a third-party investor in the company mentioned posted in this video or radio show. The non-affiliated third parties compensated may or may not have shares to liquidate, which could affect the stock price. Assume that any security mentioned is owned by Stock Legends and may be buying or selling, adding or subtracting away from the position that they have, regardless of anything said, inferred, construed, or referred to. Believe before or after starting company profile. Always do your own due diligence prior to making investment decisions. Never borrow money and buy penny stocks. Always remember penny stocks are very risky. You could possibly lose your wife, keys, car, house, and everything else comes along with it. Also, be aware that information provided concerning certain securities contains forward-looking statements that involve risks and uncertainties. As in any investment, never invest in a penny stock unless you can afford to lose your full or entire investment. We completely abide by the Fifth Amendment for this full entire show.